Maybe that's what it is. Was that just for Chi-Wayne? Was that just for today? Oh, then that would explain it. So um, maybe it's just their Saturday thing. Maybe I'll check that out. Okay, well, then maybe there is a good solution using Zoom. All right, so this is the weekly Saturday night podcast. Looking at some swing trade frames and some big swing ideas. We're just starting this off now. Try to get a running start going into the new year. It's December 19th, 2020. And so Chi Wang has offered us Caterpillar. So he's looking at a weekly range compression. Let's make that blue a little easier to see. A weekly range compression after a breakout a couple weeks ago. So I would say, yeah, here was the breakout he's talking about. And then this is the range compression inside here. I like the fact that it was a slightly higher low on the weeklies. That's kind of what I pay the most attention to, is that these kind of upward moves are what keeps the trend alive for me. I like the higher highs, but the higher lows is really an indication of where the buyers get the first act of courage. Let's think of it in that way. You know, the low of the week, when the guy started buying there and he put the bottom in, that was the first act of courage. So that's the most important one, is that lowest low on the weekly. At 177, then, these guys just decided, you know what, we're going to start buying here. Whereas the previous week, it was 176. And now it's 177. So they're getting a little bit braver. Right. So the swing box is the weekly high versus low of 184 and 177, and he's using this weekly high for 184 rather than this one, although it's really close. Starting day trading in this first space here, going on the way up with the first position at 181.30, which is a 30-minute peak and a 2-hour RL10 peak. That's good. Second position at 182 and then 183. So if this thing does break out of this box, this thing should really go. But by that time, he will have three positions on, free and clear, and certainly by that time, you would be able to get your risk out of there. If this was where your risk is, by the time you get that third position on, you should be able to lock in gains on those three, and then there you are. Keep for a swing if there's a break above 184 and a second position on 187. Yeah, if it breaks out above the C3. Okay, so so these are the three. I should do that in green, I suppose. These would be the three day trading positions, and then if it breaks out of that yellow box, that's where he's going to pick up the swing. So whatever you can gain in here from those three positions, keeping 1/5 for the swing that gets initiated at 184. And then adding the second position here at 187, that makes good sense. I like that. That's like an all-time high anyway. So there you go. I think that's perfectly played, well justified. I like it. I do not hate it. So let me cover some of the ideas that the boys were working on in the last hour. Um, I'm not going to read this whole thing. It goes deep into Sunal and Jeff's trading strategy. But what I want to show you is the idea that on their trade frames when they're working things out. Um, so this is more of an impressionistic painting than anything. Okay. That they are using the let's see I think that yeah this is the weekly chart, and then this is the daily chart, and then this is the hourly chart. And so sometimes they work the weekly and daily when they're looking like at core positions and swing, and then they'll look at daily and hourly when they're trying to do swing and uh, a refined day, and then they may go with hourly to a 5 minute chart if they're really trying to emphasize the intraday trade. And so when there are critical states here on the daily swing. So this thing had been this is the DAX future, so it had been on a nice tight compression after this last trade. So here was the big breakdown, and then the RLXD, and Jeff has it programmed so that his not only the RL10, but he's also got the dragon reflecting the MACD 4 season. So here's the winter of the dragon, and here's where he turns to spring, summer. How pretty is that, huh? And so this one is now a Z3 pinch breakout and a supported fall crossing. And this was the SSC, and then they keep each other accountable with their trade narration over in here. So this is an example of hybrid trading across multiple time frames, and this is the DAX futures, and they use a combination again of core, swing, and day trading on a primary. It works for them like the S&P does for us. So just a nice piece of work. This was from trader JG, and I have to keep his his name protected for so his firm doesn't snap. And in his strategy, he's looking for growth stocks in critical states on dailies, and then he uses the 65-minute chart for his tactical acceleration there, or his tactical refinement intraday. So daily for setup, and what he liked on this one was a sell off from a 10-day high that held the VWAP, and then started to get large volume in here. And then on the day of the breakout, there was a big gap. This big gap was this big gap. And it was special because this gap opening had completely cleared all of this stuff here. So it was all negated. It wasn't just a gap above the previous day, but it gapped all the way up and out of this congestion. So it was fair to say this was a brand new world. And that's what this was. So he sees a VWAP and an opportunity to play a minimum manageable risk box to the PSAR. We talked about adding a second position here, but his stop was so small, and therefore his position was significant, that he already had as much risk on there as he wanted to. And although he noted that this was a usual place to do a second position, he didn't this time because he had a full scoop on already. And then he cashed a really nice trade in here. He observed the pullback held stable right in here. Then there was a gap to here, and he noticed this. He was waiting for a pullback, one more pullback, and when it held this price level, he then struck with a Z3 pinch breakout and got two positions in quick, and cash for that, another nice intraday trade in here on. I'm sorry, and that was a day. That's a day. That's a day. So he's got a short-term swing, and so his little swing trades tend to last like 2 to 4 days, and he likes to get his two positions in big and then just hold them. He's willing to take the overnight heat, and he's making, and that's like I said, he's plus 130% year to date. So that was his trade in Uber. And this was the same. It was the same idea in Lyft, LYFT. So he treats them as a pair trade. So the research he does on the sector really applies to both of them. So he's very efficient in his play there as well. So again, this has his standard treatment that it held the 10-day SMA and then November 9th gap day. So this was the November 9th gap day, and it held this whole period of time. Started seeing some increasing volume, so it declined and then reversed and was going up. That's in here. And then the start of this day, so there was he looks for that increased buying pressure. So lots of buying pressure, a decay, and then the first sign of interest. And then this is the breakout day. So he's ready for that. And his first one, so here was the close on the daily. And then it opened, and so he tried this one. It rolled over fast. So on the RLXD, he took a fractional loss. Then the next day it gapped down and then reversed sharply. So he bought it back. So what a beautiful re-entry. That reversal sort of negates all of this. So he's got his first position. He gets his second position when this is free and clear above the previous hump of the RL10. So he gets his second position in quick. So now he doesn't feel a need to do a COTA 2 there, although that is a COTA 2. And then, so this is hourly chart. So that was a close. This was a new open. It gapped up and then sold off. And then here he just takes the PSAR exit. So he gets these two entries and exiting here. And that was massive goodness. So this is entering like at 40 and 42. And his risk on that is down here at, like at the Bollinger Band mean, so 39.50. So he was using a 50-cent initial risk on that one. And so he cashes that at 46.50. So the first one goes from 40 to 46.50, and that's 13R. And then the second one is 42 to 46.50. That's 450 over 50. So that's 9R. So that's composite 22R. And he's getting anywhere from 10 to 20% of his portfolio on these special targets. And so that got him to 130% this year. So for him, a lot of this is growth stocks and target selection and being very strict on the setup conditions. So that ain't bad. That's his technique. That's Trader JG. And you've seen me do a couple coaching sessions with him already this year. He has done a model coaching report. So well done there. This one is Bill Scheit, our drummer. And so this is a trade that he's still in. So the IWM swing trade, and the context is this: it's a buy on the ETF 13 from October 30th. On October 30th, the ETF 13 portfolio, the best signals were these, but the Qs had pulled back, and so they were not on a. And so the two ETFs that we talked about on November 5th. So on 11/5 during the election, and the best of all possible worlds happened, I said on that day that EEM and IWM were well positioned for a relief rally now that there would be gridlock in government and Trump is gone. So there's a relief rally in IWM and EEM. And that was reflected. They were already at the top of the ETF 13 portfolio stack. So Bill was well prepared. And so what he noticed was a COTA 2 here and here. So you have a low, a higher low, and you have this up, pullback, and resumption, and bang, that's where you get it with the RLXD. And now you've got a tight stop in here. So you're buying it around 160 and with about an $8 risk. And he and Jeff are just working the intraday study to just buy it and just use the PSAR. So they're not using the Wu Wei. The Wu Wei exit on that in this case would be 1, 2, 3. So the Wu Wei exit would keep this in play until you got to here, and then you would raise this up and then move it to the Bollinger Band mean and then follow it like that. But for their purposes on the swing trade, it just feels correct that the PSAR is okay because you actually have the southern skin of the dragon acting as the first warning signal. So if this thing were to breach once and then twice, then they're out. So they're just trailing it with the PSAR. And so now if you're buying it at 160 and this thing is at 197, that's plus 37 bucks on an initial risk of 8. So that's about 4.5 R. So nothing wrong with that. And so this is how he's using the BMR, which is a blended monthly rebalancing. But if you look at BMR as the core, now what Bill is doing is using hybrid trading to use the accelerated daily charts in order to take the information from the core position and then make some swing trade frames to get the extra benefits. And I would tell you that if you look at this gap up and sell off, this is a place where there's a second position available here, here, here. Those are all plus positions. Now, you don't have to do that with a swing trade, but when you see that developing, each one of those days is a day when you can turbo trade because it broke out above a weekly swing trade high. Those that's a signal of new buying pressure. So that's Bill Scheidt. He also offered this one, and this is how he's been doing the PBW. And this is an example of adding those positions. So he added a position down in here and took an exit at the PSAR. So he had this risk box and then trade Observe this coming back. Here's your PSAR flip. So he initiates here with a wrist box here. And that was enough to get him out right there. He was not prepared to re-enter either here or here on the, because that you don't get the RLXD until here. And he actually wanted to see it break above this because that was like the third leg up. So if this was leg 1 and this is leg 2 and this could be leg 3, in our view, it's not unusual for the first leg to be the biggest, then the second leg, and then the third leg to be the smallest. So he really wanted to see it get above this price level. And so he re-engaged at 100, about 100, with a stop down here at the, like about a 10% stop, which is suitable for his long term. Okay. So that was that. This was my notes from our discussion. I'll try to remember all those. So one of the things that we reviewed there was the techniques, excuse me, that we've all been using, which I talked about Saturday on visual box trading. And so the idea of visual box trading is that, maybe price moves into some kind of thing and then it moves up and does it. And then does. And sometimes those little consolidation zones get really compressed into a nice tight, this is one where maybe the Z3s hadn't pinched yet. So we might have seen this as a critical state. We might have seen critical states in here in the usual way. Here's one where the critical state is also probably a Z3 pinch, because wherever we draw those boxes now, something like that maybe. The Z3 lines are now contained inside the pinch box, which makes this even better. This is good because you now have a breakout, and really what we do on this is, you have, if it breaks out here, or in this case even right there, you want to go long. And there might be 2 entries here. Or if it breaks out this way, you might get short here with an additional one here, or you get one here and maybe another one right there, like on a collapsing dragon or something like that. And so these critical states, again, are places in which you have a reasonable belief that there could be a larger than normal move in either direction in a shorter than normal period of time. That's what makes it a critical state. And then the price patterns give you the hypotheses. Well, when you start chaining that together weekly and daily, so what you saw Jeff and Sonal do is they have this strategy of weekly, daily, hourly. And you actually saw Bill doing like from his BMR as a source, and then he was doing weekly review and a daily. Whereas Jeff and Sonal will take a look at a daily and then refine it with the hourly. And they will also do a weekly chart and refine it with the daily. And then they can take that whole context and have multiple layers of analysis working. Bill Scheitz, you saw, he went from the BMR, a weekly review of the BMR, into a daily frame in the usual way. And he's not messing around with the intraday stuff at all. And you've actually seen me take exactly that same, where I'm looking at 1 minute, or a 30-minute, a 2-hour, and then a daily and a weekly and a monthly. So the main idea there is, when you're starting to stack those time frames, that like you saw me do this weekend and the previous weekend, I'll do with the weekly chart, I'll have some kind of boundaries there, which says if it breaks out of the price levels on a weekly chart, then this is where I'm going to pick up the swing long. And if it breaks out on the downside, that's where I'm going to pick up the swing short. But meanwhile, I'm looking, at the most current daily frame. And so I'm going to draw one that's like, maybe this is where the daily frame is right now. And maybe there's a second case where that daily frame is maybe on a different chart, is down here. This is a special case. When the daily frame is at an extreme on the weekly, that's a really special case. That gives you a reason to tap dance for joy, because now you've stacked up there's two reasons to really love this one right here, because you have a critical state on a weekly and a critical state on a daily chart. Whereas this one in the middle, what you're really looking to do is, if it opens inside that daily box and then breaks out, there's your mechanical entry for a day trade. And all you're doing in this little green zone here is day trading only. You're not committing to a swing trade until it breaks out of the weekly box, the big box. And then this is where I like to keep 1/5 of the position size I was able to accumulate during the daily day trading. And then I like to keep 1/5 of it with markets money, and off it goes. And then I've stacked some other price targets up here where I could add here's my first swing, there's my second swing, there's my third swing, and there's maybe my fourth position. And so each one of those corresponds to some important technical support resistance level off of the weekly charts. And in the space between there, I'm going to do that as a yellow. I'm doing turbo day trading inside here, but I'm not increasing the daily, or I'm not increasing the swing position until it gets through these identified resistance levels where I keep adding 1/5 of that position. So if you go back and look at PBW, which just broke out above 100, when it made the turn down here, I think this was like at 30. And so there were different spots on weekly charts where, even though we were day trading in between those price levels, it wasn't until it broke out of those resistance levels on the weekly chart that we kept growing the position. But what that allowed us to do was to start with one swing position down here at 30 and then add 5 or 6 of them all the way up, so that by the time it got up to 100 the first time, we had a considerable position that was paid for with markets money that came out of the day trades that we've been doing. So in that sense, you can rapidly scale on a symbol that was very successful. Now, if this trade here in the middle, that little that box broke down, so now this is where I might be day trading it short in this red region until such time as it breaks down below the weekly box, and then I pick up a weekly swing. So that means, now I want you to notice that, so now when it is, the daily box is also at an extreme, then when it breaks out of the low of the day, and it's also the weekly low or the 10-day low or whatever, wherever we've drawn the dimensions of this box, then there are two reasons to really love this to the downside. And so it might even be from day one, right from the first entry that we're getting short. So that's kind of crucial. So that's what we mean by visual box trading. So if you go back and listen to 1212, and then you listen, I did one last night and posted it on Patreon already. It's dated for 1219, but I recorded it last night on 1218. But it's this weekend's swing portfolio. And all I did there was go through that stack of 50 charts, that stack of 50 symbols on a weekly basis. And I was identifying, where it was in the price action and trying to identify these weekly boxes and daily boxes. I don't necessarily do that on every single one. I mean, there's not always an obvious one, but what I'm looking for there on the weekly is that pattern recognition that tells me on that next higher time frame, that price that breaks out above whatever it is, that's a really significant move. And so I want to be ready to exploit that, because you never know if it's going to be the next PBW, which is just an amazing move, right? And they all look the same leaving that station from the turning point. So this is this combination of weekly and daily visual box trading technique. That's when you see those yellow boxes on my setups and frames. That's what that really is. That's a price level that has contained that price action, and then the breakouts feel significant. Hat tip to Nicholas Darvis, the dancer who made $2 million back in the 30s in the stock market, wrote a great book called How I Made $2 Million in the Stock Market. And that work has been carried forward by the Guppy brothers from Australia, where they carry on and extend the work of the great Nick Darvis. And I remember reading that when I was a kid. And so I think that's where the idea of these stacking boxes, I can first trace it back to there. And then I just am basically using regression lines and Bollinger Band means to support this idea of support and resistance using the Darvis box, and then using the refinement of the 30, the 10, the 30, the 90, and the 270 regression lines to give additional insights, plus the MACD. So when you put all that stuff together, that's what that multi-time frame, multi-lens analysis is all about, that we're using a variety of lenses to look at the world. So there's the world, and we're looking at it from 3 or 4 or 5 different perspectives. And what are they? MACD histogram and the 4 seasons, the RLCO Bollinger Band framework, regression line fractal framework, support and resistance, and there's one other one, pinch and stretch. So when you take a look at price action in the world through 5 lenses, from lens number 1, if you look at it and you see this, and then lens number 2 sees that, and lens number 3 sees this, pretty soon what you have here in the middle, where you're getting some confirmation of opportunities from multiple independent models, that allows you to start zeroing in on a few names that seem to be in season, and give you an increased probability of success, in my opinion. Okay, so that's what we mean by multi-time frame, multi-lens analysis. And there's some good videos on YouTube about that. Okay? Chi Wang says, when I draw the weekly box, is it covering most of the price like a statistic? Yeah, it really is. So again, when you look at it this way, like 10,000 times a year, and you see this kind of price action like that, you can feel where the regression line average is. It's going to be right there. That's the middle of that cluster, and everything north is noise, and everything south is noise. And then you just say, give me a box that covers about 2/3 of that price action, like that. And so there's about a sixth and about a sixth below. So you're discounting the the outliers in a statistical kind of way. You're just saying, all right, that's that, and you're erasing that. So that turns out to be, something like, 1/3 and 1/3. So that is like 2/3 of the price data. And so if you just, that's what the river is. The river's already telling you that. If you take a slice of that and you say, well, here's the Bollinger Band mean, and there's Z1 and Z1. Well, when you have an extended period of time in which you can see that that thing is just sideways and stable, you can just eyeball that. And I draw the boxes quickly on the weekly, and that's about as accurate as it really needs to be on a weekly. And you say, look, if the daily, it would take 1 or 2 days of daily price action to break out of that one. That's all I need to know, that it's out of this noise box, and off we go. So yeah, it's sort of a visual, relaxed, statistical thinking. But that's all I'm doing on there. And if you watch me how I draw those boxes, and I think you will feel an intuitive fit. I'm just trying to cover. I'm trying to cover that fat piece in the middle without overthinking it. You could be more rigorous with that and do a statistical treatment with precision. But I'm 63 and I've done this for 35 years. And after a while, close enough is close enough. And that way I'm not overcommitted to the exact precise price. I can treat it with a little bit of intuition. Okay. But that's the main idea. Visual box trading. All right, that's everything I wanted to cover for tonight, guys. You've seen some ideas from the advanced swing traders. Take good care, and we will see you tomorrow for the day trade frames, and we'll get after it. So take good care. I'll get this posted and published in the usual way.